we'll continue to see companies that not just gaming and betting, but also marketplaces where money needs to move a lot quick. So we don't have to rely on a Swift. We don't have to rely on a SEPA or another network to move our money around if it's already in our ecosystem. However, I do think we'll see more and more fluctuating markets, right? Where the regular currency is going up and down.
Welcome to Let's Talk Payments, the podcast where we interview payment experts about different topics. My name is David from eFlow. We help merchants across the whole world finding reliable and sustainable payment solutions. And it's an honor today to introduce Dwayne, known by many people on LinkedIn, reading your advices and interesting posts, positioning yourself as the payments strategist. We're talking today about stablecoins, but first of all, can you tell me a little bit more about you, your background, your history?
Absolutely. Well, indeed, even though nowadays I'm branding myself or mentioning myself as a payment strategist, I've been a payments professional for the last 23 years. It all started from a summer job that led into me joining a company within the issuing space, ABN AMRO Issuing at that time, very early on stage, and then continually to develop myself across different payments companies. I worked at ING Bank, I worked at Rabobank, and actually went back to university to get some other degrees specializing in information sciences. Nowadays, we call that data science, and it ended up becoming the first data scientist at Adyen. And I think that's really where my career really took off, because I was in a place where I had the opportunity to build things from the ground up, right? Really build infrastructure, work on data, work on real challenging problems along the way, diving into a lot of the Mastercard, Visa, American Express manuals and solving problems every single day. So that was a great experience. And then I just continued to develop myself, focusing a lot on data as well as on payments within the space, became a head of data, later on became a VP of data science and analytics at a company called Checkout.com. And then launched my own data science and analytics consultancy firm called DataBright. And within that, I worked with over 50 different payments companies and acquirers, helping them migrate from on-prem into the cloud and doing a lot of strategy along the way, right? So every single time we talked about why should we actually get the data from one source into a data warehouse. A lot of it revolved around building products and building solutions around that. So a lot of it became very strategic, as in why are we actually doing this, showcasing that, showing them the way forward, and how a lot of the companies, especially now in payments, have to embrace data and start building on top of that. And that was a long journey until I sort of like sold that company, and then I started writing about all of those experiences. And that has indeed led to a nice little following on LinkedIn that I'm really appreciative of. Almost 30,000 people who follow some of my content, and a newsletter that I write as well called the Payment Strategy Breakdown, where I go a little bit deeper than most, right? I don't go around and try to find news articles, but instead I look at the overall trends, right? I look at the overall trends and then really try to break that down. As if that new colleague who's just joining the company and says like, hey, I don't know where to start, I would always say like, how would I write for them, or how would I share the information with them, breaking everything down from tokenization, stablecoins, what we're discussing today, or agentic commerce, and really giving them the guidance without any expectation, right? All of it, what I do is for free. I share it for free. And then I enjoy working with other people in the industry, trying to push the industry forward and trying to make sure that we continue to innovate and leverage data as much as possible.
That's why I love your newsletters. It's not just a couple of words. It's really going deep and also helping me. Is it difficult to keep up to date with all new developments?
Well, not so much. For me, I love all facets of it, right? It's not just like I look at payments, like I could easily go and say, well, payments is one level, and then you have fintech, and then you have financial services above that. But I like to stay in the topic of payments, because I think there's so much information within payments. One, we have the different schemes, and things continue to happen. Innovation continues to happen, but also emerging technologies are encroaching onto our space. And I say that in, always a little bit of a careful way, right? Because we saw it with things like Apple Pay and Google Pay, where outside technologies that came into our space and had a huge impact. Now we're seeing that with AI and other things as well. So I actually love the fact that I can stay within the payments bubble and then look at technologies, but also look at what are we developing? What are we doing to make sure that payments continues to evolve and actually becomes better and much more secure? And how do we battle fraud and other things as well? Plus, industries within payments, things are changing as well, right? Embedded payments has been one of the major trends where we're not looking at PSPs anymore. I wrote a big thesis about 2 years ago called the disintermediation of the payment service provider.
Yeah.
Right, that wasn't to scare the payment service provider, but it was actually to showcase like, hey, things are already changing. Right, the likes of a Shopify and a Toast and other platforms are building out these ecosystems that merchants are gravitating to. Right, they're saying, hey, payments, I need that, but I also need all these other things. And if I can get it from one source, that's where people were really sort of like gravitating to. So that's been an impact on the payments industry as well, is that the traditional gateways are disappearing. So for me, payments is very much still a great topic, and it has all of these different things. So I don't see it as a challenge. I actually enjoy that there's so many different facets of it. Plus, sometimes when I'm writing a lot of these things, I also look at what's happening in the industry, right? I think so. The last couple of years, we've seen things like embedded payments, orchestration being really hot topics. Now you see things like agentic commerce, and like that's being a real hot topic. Tokenization is still definitely a hot topic. I always have to make the decision between, do I go with what's hot versus what's not? So whenever I'm writing or whenever I'm creating content, nowadays I tend to go into what I call arcs, right? And an arc is much more of if I can spend the next 4 weeks on a specific topic, right? And I can go really deep on that, that makes a lot more sense to me than trying to focus on what's in the news or what's hot or who has the hottest press release and trying to chase that. I much rather focus on how can I be as strategic as possible. So last couple of weeks, focus on agentic commerce, but then I'm also doing the leapfrog markets, right? How do you expand into new markets that are very exciting, like an India or a Brazil or an Indonesia? And how do you benefit from that as a payments company, but also as a merchant as well? So I think that for me works a lot better because it balances things a little bit out. I'm not chasing the news. Instead, I'm looking at what's happening at the overall industry, trying to break it down, become much more strategic. And to be very fair, like I try to look, I know there's other people who are creating great content, amazing content, and I definitely watch it and read it as well. But I also notice that the more I read and focus on their content, it influences me as well, right? Because they're influencers, right? They're influencers in this space. But I tend to see I have a lot of conversations, and those conversations tend to sort of like shape a lot of, okay, this is what's going on. And then I try to think a little bit broader, a little bit more helicopter view, and then share that so that I can bring others on that journey. But again, focusing on what if that new person is joining the payments team and I want to explain this to them, or they're looking for a new opportunity to go into. Is that something that I can share with them?
We can probably spend around 10 podcasts, if not more, with you to speak about different topics.
Absolutely, right?
Today it's going to be stablecoins.
Fantastic, yeah.
For the ones who are not that familiar with stablecoins, what is it? What's the difference between a stablecoin and a crypto? Can you elaborate a bit?
Yeah, absolutely. So normally when we look at fiat currency, right, the currency that doesn't matter if it's the dollars, the euros, the GBP pounds that we have, those are all currencies that are created by governments and they're issued, right? We can talk about the whole gold standard versus the standard that we have right now, but let's just say we have a fiat currency that is issued by a government. That, of course, has been digitized, right? Physical money is not really, it's still in circulation, but it's going down, right? The payments industry that we work in and e-commerce and all these other aspects are digitizing a lot of that money. So that's fiat currency. However, crypto, and especially the blockchain and Bitcoin, has created this revolution of that. What if the ones who are issuing the funds are not necessarily the governments, but are actually a blockchain, an immutable ledger that through a network we are able to issue, and it works through an algorithmic way of issuing that, so solving different problems. So that's what we had with Bitcoin. We've seen an evolution of those two worlds coming together, fiat and this crypto-enabled world, where you have new providers like a Circle or a Tether or anyone who are issuing stablecoins, which are essentially a cryptocurrency form but are pegged against a fiat currency, meaning that depending on how they do it, they can either say, hey, if you give us dollars, not physical dollars, but you transfer dollars to our bank account, what we'll do is we'll issue a digital cryptocurrency for you, which we call a stablecoin, which has the same value as the dollar that we give you, which creates with it a lot of benefits that we can talk about. But that's what we essentially have. That could be directly one-on-one. We put it into a safe or into a digital safe, and we get interest off of that, and that's how that business makes money. Or they go in different way. They buy bonds or other things that make sure that the value of what that dollar is as protected as possible, while still making some money on it for themselves as well. So that's how I would basically describe a stable coin, is that it's a equivalent of the fiat currency that is pegged against a digital form of that's on a ledger or on a blockchain, and can then be moved across different token networks or different ledgers as well.
So the biggest difference between a crypto, like we all know Bitcoin, and a stable coin would be that a stable coin is actually backed up by something which is deemed to be valuable.
Absolutely, yeah. So really, when you look at Bitcoin, when you look at Ethereum, when you look at even your meme coins, right? A lot of that is not based on an assets that necessarily behind it. It's backed by the people who believe that it's valuable into that, right? Everybody's like, Bitcoin is like the digital form of gold. Yes, but the reason, because so many people believe that, just like how we believe in a government and how we believe in a currency that isn't necessarily backed by something, because it's a bunch of IOUs now.
Yeah.
That's what you have. And then you also have stable coins, or at least stable coins who are not necessarily stablecoins, but you have cryptocurrencies who are backed with an actual asset. Like you have gold-backed cryptocurrencies, right? Where whenever you buy that, they're actually buying physical gold and moving that, and then making sure that it's pegged against that, which is a lot more challenging, of course, than doing that with dollars or digital currency that it is.
Yeah. Are there different types in stable coins as well? Not speaking about how they are backed, but in terms of how they are defined,
Yeah.
framed. Yeah.
Absolutely. So what we're now seeing is that there are a number of players who have done exceptionally well, right? So there are a lot of stable coins, from your USDC to your USDT to your Euro C, Euro T, but all of those different ones. So every company or any company can actually go in and say, we want to become a stable coin issuer. Nowadays, we have much more regulation coming into regulating that. You're operating as a financial institution. You're taking funds in. You're issuing something against it. So it's a lot more challenging than a meme coin, for instance, where it's just just a bunch of people believing in something. And is it a currency or is it an asset? So a lot of them have that. So you have a couple of companies who have done exceptionally well because they've created the adoption for it. They've been able to tap into financial markets or into traders and proven to them that, hey, if you use us, we are a stable, reliable company. There's never going to be an issue if you want to move your money in or out, so you can issue it or redeem it. There's never going to be an issue with that. And you see some of those companies have done exceptionally well. Circle is one of those who's gone to the stock market, and their valuation has grown based off that as a company that provides that service. And because of that, they have a lot of assets under management, actually, right? So a lot of those funds are being issued and they're being worked in the ecosystem. But then you have others who are not as successful. What we're seeing now is that also different governments who don't necessarily want to use USD or want to use Euro, or companies in those countries who are saying, well, we're going to do the equivalent of that. The UAE is one of those countries that they're launching their own stable coins, right? And you have different countries and different companies in those countries who are then issuing their own stable coins. And I think a great example is also with Stripe and some of the companies that they've bought, that they're allowing people to go and create their own stable coins and create their own sort of like their own issuing platform for that as well.
Yeah. So when I, as a company, would like to enter into stablecoins, am I right that it's more a matter of the platform I'm picking rather than the stablecoin itself?
Well, I think as a company, you need to decide, why am I using this, right? I think that's much more the strategic way that I look at it, is that why would I be using a stable coin in the first place? Because if I'm using a stable coin, for instance, like we're in payments, because I have merchants who, normally funds come in, would normally be paid out in fiat, but it could be a delay in that, right? But if those merchants say, well, we don't need the fiat, if you can send it in a stable coin, we can receive those funds quicker. We can access those funds because we're running a business that needs a lot of dollars coming in and dollars going out. But if we have stable coins, we can speed up that process for us. So we don't have T+2 or T+3 days before we actually get the funds into our account. I think once you know what you want to use it for, then you can start looking at what's the solution for that. And then what's the infrastructure that's backed by that as well? Are you managing your own infrastructure when it comes to your wallet infrastructure, right? Where do those funds come? Are you using, what kind of platform are you using within that? And then you can also decide, do I want to manage that part myself, the issuing and the handling of that, or am I going to use an existing platform? What am I using as an on or an off ramp for doing that? So I think, depending on what you do as a business or where you want to fit in between, that's where you have to really look at it. Like, what's my strategy? What am I trying to, why am I using a stable coin to do that? Could I use the fiat alternative? Do I want to use that? Or is it also a cost component to it, right? Like, if I'm moving money across, or is it a speed component? Do I need to move the money across much quicker? So it's all of those things that you have to decide on where you want to go with.
So you mentioned governments. You gave the UAE as an example. What is the interest for a government to issue its own stablecoin?
Well, I think one of the biggest things that we're seeing in economies nowadays is that there's so much happening in the world that more and more governments are trying to at least control how funds move in and out of their own countries. I think the UAE is a great example. Brazil is another example. India is another example, right? If you deal with those markets, what you see over there is that the regulations and the rules for how money moves in and out of those countries are pretty strict. Why? Because they want to make sure that they have control over how those funds move within that. We can come up with different reasons why they would think that, but I'm not in a government, so I don't have it. But what you see is that the more those governments are saying, if we have control over our own funds and our own currencies, and we know how money moves, we can utilize that to showcase our strength around the world, and do better business and set up much more business relationships. And of course, tax it as well, right? Taxes becomes a big part of it. If you know that money's flowing in and out of your country, you can also look at who's receiving that and who's sending that. So are they actually paying their part of the taxes? So Pix, for instance, in Brazil is a local payment method. Has nothing to do with stablecoin, but that's a way for a government to push something into a market, capture a lot of market share, but now they have the insights into how that is moving as well. India has UPI, and that's another way where a lot of that control is created by the National Corporation of Payments.
Something.
Yeah. Probably cut that out. So India has their own platform as well, and through UPI they have a lot of insights in that as well. I think stablecoin just becomes another way. If people want to utilize it for paying bills or moving money around, instead of having an institution or having a separate company do it, why as a government don't you get involved in that? Have a government-backed stable coin, give the license around it so that you can also get the insights into it, so that you can actually promote it and actually make it easier for businesses to accept it, to move money around, and actually to boost up the economy and actually make sure that money continues to flow, and then you can tax it as well.
So these governments embrace it rather than fighting it.
No.
Could you say the same about payment companies? You mentioned Stripe as an example, but is the payment industry embracing stablecoins, or are we still in a kind of pre-embracing moment?
I think there's been a lot of embracing or accepting of stablecoins. It just, again, where does it make the most sense? Where I've seen a lot of stable coins or crypto acceptance of that overall has been with gaming companies and iGaming and gambling companies. Why? a lot of those companies, the money that flows in, right? Like let's say a gaming or a gambling company, people are paying to bet on sports betting or whatever that may be. The money comes in. Oftentimes, it sits there for less than 24 hours because either people lose their bet,
Yeah.
okay, and then it goes towards the company and whatever bills they have to pay. But also, whenever they win, then the money has to move out again. That could all happen within a cycle of 24 hours. Traditional payment methods, right? By the time that transaction is being authorized and then cleared and then settled, like we're seeing, if we have T+2 or T+3, that takes a little bit of time. So what we're seeing now is I see more and more adoptions of those platforms enabling cryptocurrencies or stablecoins to come in, because they know once that money comes in, it's between 1 and 15 minutes that the money is in their actual wallet. And if they have to do a payout, they can move it out of that wallet the same day. Customer is happy, the company is happy. There's much more transparency for them as well. So that's where I see a lot of the embracing, but that's been going on for the last 2, 3, 4 years probably that we've been seeing that. Now we're looking at everybody else, and then especially the trading, you have that as well. Trading makes it a lot easier. Not necessarily the parts where payments really come in, because that's much more of a banking or a fintech aspect where money moves around. So now that I'm looking at merchants, are they actually accepting? Yes, they want to accept cryptocurrencies. Yes, they want to accept stablecoins. They want to make it as easy for every customer to pay that. However, I don't see numbers significantly saying that we as consumers are out there taking our fiat currency, putting it in stable coins or into cryptocurrencies, and then going into the shops and then paying with it, right? If we do invest, right, we invest in the cryptocurrency, keep it in a wallet, and then want to see that value rise, right? You invest in a Bitcoin, you invest in an Ethereum, but you don't use it as a spending capabilities. With stablecoin, it could just be your intermediary that you're using. Hey, I'm not investing into it right now, but I also don't want to get it back into my bank account. Let's get into a stablecoin so that I don't go up and down with the fluctuations of the market. But I'm not in a position where I'm trading at the moment. So that's where I see the embracement, but I don't see it in a payments consumer type of way where I'm going into a Shopify store or a physical store and trying to pay with it. However, I do think we'll see more and more fluctuating markets, right? Where the regular currency is going up and down, where people are saying, hey, if I could have my own debit card that's connected to my wallet, but it's not connected to the local currency, but I can put it into a stable coin, so that if I make my money, I'd much rather have it in that stable coin because I trust that not to fluctuate as much. But then the moment I can spend it, you have the just-in-time exchange where I can spend in whatever that currency is, but it's being deducted from my stable coin infrastructure wallet. I think that's where a big opportunity is going to
But
happen.
then the governments from those people would also need to accept that, right? Because probably these are the countries. I mean, we're not speaking about USD, about GBP, whatever. So if I understand you correctly, those would be people in certain countries where the local currency is very volatile. They would prefer to have, let's say, USDC in their wallet. Would they be able to use those USDCs within their own country?
Yeah, I think that's where the gray area comes in, right? And I'm not like, you have the things like government wants you to have all your currencies in the bank accounts or in that fiat. However, if that's not a stable currency, people are always going to look for different ways. So historically, people would then much rather have gold or silver or another form of asset that is protecting them against inflation or fluctuation within the market. I think this is one of those gray areas, is that especially those markets don't necessarily have the framework set in place to, again, fight against it, right? They have bigger issues to solve. So what we're seeing is that, okay, as long as the payment happens in that currency and it is being able to process and it moves into the economy, they're happy with that, right? So you see a lot of those different countries who don't have the stable infrastructure. They're always looking for a stable currency themselves. Like, you have countries in Africa, you have countries in Asia, you have countries in South America where that fluctuation happens, but they're I don't want to say putting a blind eye, but it's a gray area where they're saying we don't have this regulation as far as stable coins and cryptocurrencies figured out. But if money can flow in and out of our economy, at least helping the people in our economy, and then reinvest that into becoming a much more stable country, we'll definitely see that. But then we're getting into the whole political aspect of it, and that's something that I like to avoid as well.
How do card schemes react on this development?
Yeah. So I think, as with any new technology, anything that's emerging, we haven't seen card schemes always be the first one in line, right? Because if it erodes your current business, or it can have an impact on your current business, you're not going to shout it from the rooftops and say, hey, this is the next thing.
No.
But what we've seen is a gradual acceptance of, again, what's happening in the business. If you have those gaming companies, if you have those betting sites, or if you have acquirers who are then sitting in the loop and saying, well, what can we do? How can we enable this? How can we work with cryptocurrency platforms or on-ramps and off-ramps? What can we enable? So we've seen different experiments or trials or different options being there. So I think both Mastercard and Visa allow certain acquirers who have enrolled into those programs to get settled into stablecoins, for instance. So they've partnered up with some of those bigger issuers and then say, well, normally we would pay you out fiat, but if you want to, we can also pay you out in the stablecoin. And if you're ending up paying stablecoin down the line anyway, you can say, well, we'll gladly take those stablecoins, because then we can pay them out. So we're seeing experiments. What I'm getting from inside information, or at least I don't want to say inside information, but what I'm getting from my sources is that more and more companies are enrolling in that because they have clients who are requesting that and are providing that. So is it a gradual transformation to blockchain, to ledgers, to cryptocurrencies and stablecoins? Absolutely not. But gradually we're seeing that coming into place. I think still very much, when we look at the cryptocurrency in the cryptocurrencies overall, we're still seeing a lot of volatility within that. So I think stablecoin just has a very good chance to be the much more stable factor within that, and allowing that to be an option. Not necessarily the first thing, but definitely be an option, especially when you're trying to reduce settlement times and when you're trying to give merchants much more options into how they want to receive their funds.
How stable are stablecoins?
Well, relatively stable, right? Because if you look at the way that the stablecoins are being issued, the ones that do extremely well tend to be extremely stable. Yes, there are political influences. Yes, things are happening. Yes, the dollar can lose value against other ones. But if you're mainly operating in dollars anyway, you prefer dollars, because that whole exchange going back and forth, that's another segment. So if you're operating and you're getting USD backed stable coins, that's when you want to operate in. Then it's just a matter of if is it in a bank account, or is it in a wallet that we're managing, or is it another institution taking care of that? So they're relatively stable. It's just the currency itself can still have its fluctuation. And then you have to look at, okay, how am I operating? If I'm an international business and I'm getting, and I have to pay for bills in other currencies and in other regions. So I have Europe, I have Asia, I have all these different currencies. Doesn't make sense for me to have all of my funds in a USD stablecoin if the USD value is dropping versus the other ones. Of course not. But then it's all about hedging and moving money around.
Yeah.
But that can also happen in the different stablecoins. So you see, like a company like a Circle doesn't just do USD-C. They also do Euro C, and they're going into other markets because the market is dictating, hey, we want to have these currency pairs now. So you'll see a whole FX market around stablecoins that already exists, that where you have to hedge that as well. And of course, with technology and trading strategies and AI, as volume comes in, as you have to pay your bills, how do you optimize that? Hey, you know what? I need 60-40 ratio on USD to euro. Oh, wait a second. I have a little bit more complex. I need an Australian stable coin. I need a Hong Kong stable coin. I need a euro stable coin. I need a UAE, and I need a USD. And these are my ratios. And every day throughout the day, as funds are coming in, I'm creating those strategies to make sure that I have as little slippage as possible, that I don't lose too much on commissions and fees and everything, but that I'm able to pay the bills or on or off ramp them wherever I need to.
So help me understand. I understand that there is a volatility of the currency backing the stablecoin, which has always been the case. Let's say that the value of US dollar decreases. Is that also the moment that the value of the USDC immediately decreases, or is there a kind of algorithm following that trend?
No, so those who are pegged 1-to-1, right? So meaning that whatever a dollar is worth right now, if I get a USDC, so if I get the stable coin in that, that's what it's worth. Meaning that if I give you $1 and I get the USDC, once I exchange it, I get the same thing back. So if my buying power with that US dollar in the US economy or wherever I'm spending that gets me this, right? Like we always sometimes look at the Big Mac index, right? Like how much does a Big Mac cost, right? At McDonald's. And if it's $5 now, but next year's it's $10, we're like, oh, wait a second. What happened, right? Well, it means that the dollar dropped in value because that Big Mac didn't change. It's still the same thing. Of course, we can talk about inflation and the cost of the goods and all those other things, but let's just keep it at that relative level. So if I give you a US dollar and I get a the stable coin for that in exchange, that exchange is going to be 1-on-1. It's what we're looking at, the buying power, right? Because that's the up and down. Like if I want to exchange it for another currency and then spend the equivalent of that currency in that country, that's where we're going to see the impact. So if I'm just dealing in US dollars overall, as long as I'm doing that, I'm fine. But if I'm going into different currencies, like I'm saying, you buying goods and services in different countries, then it's something that you have to monitor. But overall, the US dollar and the USD component of that in a stable coin stays exactly the same.
Okay. So let's take Circle as an example. Yeah. If I understand correctly, they basically are able to say, hey, you can trust us because we have a lot of US dollar backing up the USDC that we issue. You could argue that there's many reasons not to trust governments, but we decided to skip that topic. Why would I, as a consumer or as a company, trust the Circles of this world?
Well, I think a lot of those companies are, every step of the way, they're trying to earn that trust, right? So when they're just starting out, it's a legitimate question. Why would I trust you? And what a lot of them have done is say, well, look, we're licensed, so meaning that we have to report to the government, especially in the stable coins. We have to report to the government that we have our books in order. So if they want to come and audit us, if we tell you we don't take your money and do something else with it, we're telling you we're taking your dollar and we're buying a bond, or we're taking the dollars and we're storing that in a safekeeping account and we're not touching anything of that, or we're putting it in an interest rate account where we're actually generating interest on that. But the moment you want it, it's available, right? So for them, that's also the way that they're making money with it. So every step of the way, getting new regulations, getting as they're pushing their own governments to put regulations around that, which make sure that they're getting audited or that they're compliant and secure in making sure that the funds are actually there, that actually works in their benefit for at least the stable coin issuer providers. So that's one thing. The other thing is also the trust that we as people, or at least the ones who are buying the stable coins, are giving to it. Like with Bitcoin, there's nothing back in it except for the network that continues to grow. As more and more and more people invest in it, the trust becomes stronger, basically. Same thing happens with a stablecoin issuer. The more we believe that that company is good at what they're doing and they're not having any outages, they're not being hacked, they're not doing any of those things, none of those things are happening, the more trust we have in it. And that trust, depending on how much money is pouring into the stablecoin, is actually increasing. So the more money they have under management, the more like, oh, they're essentially, I don't want to say too big to fall, but to fail, but they're definitely becoming much more stronger. So when you look at those numbers, you're putting your trust into the company and into the network and into the leadership and making sure that things are there. Of course, within crypto, we've seen hacks and exploitations and all of these other things. It's also, how are they making sure that that doesn't happen with them?
Yeah.
What type of security do they have in place? Do they hire the best engineers to make sure that that doesn't happen? Are they continuously improving their network to make sure that those hacks are not happening? Or if people are stealing cryptocurrencies and it's actually illegitimate parties who are getting access to that funds, are they making it a hard time for those stable coins not to be recouped, basically? Because again, if somebody steals 100 million of your stable coins that was issued by Circle, what are you putting in place to help prevent that, or even help maybe the true owner to recoup that?
Yeah.
Again, that becomes something that governments and police and investigation comes into and stuff. But that's where you see different parties also providing those type of solutions within the market. And I think that's interesting. Are they collaborating with those parties as well to make sure that that's safe kept, but also prevented as much as possible?
So how challenging would it be for a new issuer to enter into this market?
I think there's still a lot of opportunity. Again, it's all about trust, but it's also about there's over 200 different countries in the world, meaning that at a minimum, every one of those countries could have a new stable coin. And then most of the time, it's also what can you do with it? How is it regulated? So most of the time, multiply that by 2 or by 3, you can have 2 or 3 different versions of that. But then it's also about what is backing that. Is it the actual currency, or are you using another way to back that up, right? Like if a country has a very volatile currency, does it make sense for them to launch their own stable coin backed by their own currencies? Or do they say, well, we're doing this stable coin, but we're doing it in a different way. We're actually buying the equivalent of that in a gold or a silver or something else, or we're buying that, but we're buying another stable coin to actually stabilize what we have, and then utilizing that to make transactions happen. So I actually believe that there's a lot of opportunity. Like I think the companies that Stripe has bought, proven that others can start issuing that.
Yeah.
I think it's just about the use case. Where do we do it? How do you do it? And why are you doing it? I think that becomes really important. I think also there's going to be a lot of stablecoins that are probably going to get issued by platforms who are already managing a lot of funds, right? I can easily imagine an Uber or an Airbnb or anything like that saying we're launching our own stablecoin because we have the circular economy for ourselves, where money moves in and money moves out, and it actually benefits us because we can actually utilize that ledger. I think it was yesterday I had a conversation about Revolut actually using Polygon as their network to move money between their own banks that they have partnerships with, or that they're trusting to move money from Europe to the US and from the US to somewhere else within their own platform. So you see the cryptocurrency, or at least the blockchain ledgers and the networks being utilized for that. But I can also easily say, hey, you can have your own network. I think it's JP Morgan who has their own JP coin that they're utilizing for that as well, to make money move within the company itself. So there's an infinite possibilities of doing that. It's not just governments, it's businesses who can do it as well. It's financial institutions who can do it as well, where you have those things. It's again, what's the use case? Why are you using it? What's the benefit of it? Does it help with speed? Does it help with stability? Does it help with any other things? And how are you utilizing that? So I still see a lot of opportunities for that.
Yeah. And the example of JP Morgan and potentially Uber, Airbnb, etc., that would be basically copying Stripe, right? If my understanding is correct.
Yeah, so a lot of them are, so because a lot of the blockchain technology and a lot of the cryptocurrency is very open source.
Yeah.
What you've seen is some companies who do have the leverage themselves. They do a lot of funds. They move a lot of money around. They have their own banking network and infrastructure to move things around. Doesn't make sense for them to, instead of having another third party manage that and guide that, hey, what if we do it ourselves? What if money comes in, we've created this own blockchain ledger and this own network internally, and we're moving money between all of our different institutions. We'll deal with the settlement and all those other aspects later, but we know that within this network we have that trust, so we don't have to rely on a Swift. We don't have to rely on a SEPA or another network to move our money around if it's already in our ecosystem. I think that's where it's not necessarily going to be things where they necessarily have to be publicized, but it's is efficiency. Again, it's making money move faster, and it's allowing companies to actually be innovative and actually speed up a lot of their processes as well.
The fact that certain governments move to stablecoins, potentially because of the volatility of their own currency, doesn't that increase the concentration risk looking at all available stablecoins globally?
Well, I don't think most governments are looking to move to stable coins. I think a lot of them are hedging their own, hedging against it, right? So if a government says, we'll work with different parties to create our own stable coin, meaning that one, they trust that their currency, most of the time, they need to have some level of stability themselves, and then say, we're allowing this because people just want to move money faster, and allowing this will help those companies move that money faster, but we're in the loop. I think it's the ones who have high volatility in their currencies. They're not at a level where their economy or their currency is stable enough for them to make any type of stable coin to do that, because that's not a problem that they should be solving right now.
Okay, yeah.
So most likely those governments are trying to solve other problems first, making sure that people come within the banking infrastructure, and that currency is being much more digitized, and that they can properly tax the citizens as well as the businesses. So that's where a lot of those governments, you're seeing a lot of the high volatility that needs to be resolved as well. There might be war, there might be other political unrest. So oftentimes that's not the first thing on the radar to focus on stable coins and cryptocurrencies. What you see, however, is that the people within those societies, they deal with the effects of a highly volatile currency. If you're in a country, I think Zimbabwe is one of those countries that we have the best example of, is where you go from a regular currency to high superinflation, and all of a sudden you're walking around with $5 billion bills basically in package and carrots to be able to get to buy a loaf of bread basically. The people within that society, they're looking for other solutions. And if they're able to make money in this digitized global economy, where they can say, hey, from my laptop, I can make money, but then the money comes in. If I have it in my local currency, today I can buy a loaf of bread with it. Tomorrow, I can't even get a bag to put the loaf of bread in, for instance. So what you're seeing is that the people are then looking for solutions. Oh, wait a second. Instead of me getting the money and getting it into my local currency, which can lose its value 10, 20, 30, 40, 50% in a matter of days, I might be focusing on something else, and then I come back and half my money is basically gone. That's where you're seeing them looking for those solutions. Hey, what if I take my mobile phone, or what if I download this app and I can have a wallet, and instead of somebody sending me it in my currency, I'll tell them, hey, you know what? I can't keep US dollars in my bank account because my bank doesn't allow that, but I can have an app on my phone that acts as if it's my digital wallet basically, and I can have somebody send USDC or whatever stable coin is in there, so that if I go do something else, or I'm not paying attention to it, once I get back, it's still there in that currency. And if I need it, then again, new innovations where you can have a card, or you can have a mobile phone, or you can have a QR code where I can actually spend it, and it can extract it from my wallet, and I can spend it in the local currencies. That's where I see a lot of the opportunities and stuff. And then it's really just the people who are saying, well, the change needs to come, but if the government is not providing that change, we're going to look for solutions that will solve our problems.
But that would then be an example of leading to a bigger concentration risk, for example, to US dollar, right? Or USDC, but in the end, the backing currency US dollar.
Yeah, absolutely. Right. And so we'll see. You can have much more concentration, and of course that risk that is tied to that within that. But again, governments who understand that and see that as well will have to act accordingly.
Yeah.
If you have a society, if you have people who are productive, right? This is why we still look at GBP, right? Like how productive is your country? If you have skilled laborers, if you have people who are producing labor or products or services, right? That's money that's being generated and it's coming in. how do you stabilize the economy within that? How do you tax it? How do you then leverage that to build a better system? How do you then put people in place to build a better society? So yes, there will be a concentration risk, but it also showcases that the opportunity is there, or that you can actually do something with that. Then you need to get involved. You see some governments drastically banning crypto. We're not doing that, and being very restrictive of it. But now what we're seeing is that as there's more and more understanding, you see some of those governments coming back from it and then introducing all of a sudden the frameworks, allowing them or allowing their citizens to then say, okay, yes, you can do it, but there's only 1, 2, 3 companies who can allow you to store those cryptocurrencies, or that's not the way that cryptocurrency, but at least get you the on and off ramp it, or use a stablecoin and then work with them to utilize it.
But am I right that that one of the biggest risks when it comes to stablecoins would be that, for example, US dollar would get in trouble? Which, I mean, if you look at 20 years ago, that would already cause major issues. But knowing that is probably one of the often used currencies to back up to a stablecoin, it might even lead to bigger issues should that happen tomorrow.
Well, I think then we're leading under the assumption that it's that big, right? Like, even though we see the numbers, right? Like every single week, I'm amazed about companies who are now worth $1 trillion and $5 trillion and stuff. But if you look at the global span of how many trillions of dollars are in the global economy, right? Like, there's, for a reason, US dollar is the currency of global trade. It's being used in oil. It's being used in public markets and trades. It's there. To say stable coins have such a great impact, I don't even know what the current market cap is, but even if it's in the trillions of dollars, it's still a very small slice of the overall global economy. So unless we get to such a big part, which means all the banks across the world, everybody's dealing with US dollars, is converting that within that. Of course, then you get the concentration of those type of issues. But then most likely, once that becomes too big, or once it becomes, in the double digits, then all of a sudden, hey, we have to do something about it, right? Or if we're Euro, why are we allowing companies to have USD stable coins on their balance sheets or anything like that? So I think then we'll say it. So I think even though it looks as a big, that is big, it's definitely growing, right? We're seeing the cryptocurrency, we're seeing the stablecoin market definitely growing. We see a lot of volume, right? We see big numbers as in, we're moving more money than a Mastercard or a Visa is moving. So yeah, but if you and I have 20 transactions a day moving money back and forth, and we count that as money has been moved, how much money have we actually moved, right? How much money has actually been there? Not to take anything away from it, but also what's the value creation in what we've done. So I think it's still very small relative to the global economy and everything that's out there. Plus, we have to understand a currency is essentially an IOU, right? There's no value in the currency itself. It's the exchange of a service, a good, or a time that we've captured into a currency, right? When we really break it down, right? Like, if we do business and you say, Dwayne, I need an hour of your time, and I tell you what that is, the way for you to pay me is to say, hey, I'm going to give you whatever your fee is, in a paper format or a digital format or whatever, but that's the exchange. I've given you my time, my resources, my product, my service, or whatever that is, and you've given me the way that you've captured value somewhere else, and that you exchange, and that's what we're using. And that's exactly what a stablecoin is. So the reason people are using that is just to move that around. But the value that's being created, again, is the services, it's the products, it's oil, it's the materials that we're using to build our phones. And we use the stable coins and the currency to capture that value and exchange that, so that I don't have to say, hey, if I'm going to give you an hour of my time, you're going to have to give me a loaf of bread, or 10 loaves of bread, 100 loaves of bread, or whatever that might be. So I don't see the issue with that. I think what stablecoin does, and what cryptocurrency has shown us, what the ledger has shown us, is that we've built a lot of legacy infrastructure. we're now moving in a much more fast-paced, real-time processing, wanting to get my funds quicker. We're seeing another technology that's built outside of the rails that we work on in payments coming into our space and pushing us to innovate and move faster. And that's what we're currently seeing. So for me, stablecoin is nothing more than that 10-year development from Bitcoin to being able to say, oh, wait a second, we need to apply a ledger. We need to apply faster settlements, because this new world where we want to have money move much faster is forcing us to do that.
Yeah.
And I don't see too much of a risk of that happening a lot more. I think it's just a matter of the ledger has moved from maybe the traditional rails to another rails enabling that.
But could it also mean that in X years from now, I as a consumer am actually making use of the stablecoin framework network without being aware of it?
Oh, I think we're already, a lot of us are already doing that. So I gave the example of a Revolut, right? If they're using a Polygon network, for instance, what do I care?
Yeah.
Right? If I can move I need US dollars now, this instance, I have euro. I go into the app, I say, move my euros into USD, and then I can pay my bill in US dollars, or I can send somebody those US dollars. Why do I care what happens in the back end? We've never cared about how your bank does that, right? Like the bank basically takes your money and then opens up a book and then says, okay, you gave us $1,000, so we technically owe you $1,000, unless you move that money somewhere else, because then it moves from our ledger to another bank's ledger, because then we owe that bank the money that you gave us, but we owe you less and we owe them, and then somewhere that needs to be settled. How that happens, I think the majority of people, probably 99.99% of the people, do not care. The people in payments, we care, because that's the business that we live in. But I don't think that we care.
No.
Mm.
How does the regulatory framework look like right now? You already mentioned a couple of times companies being licensed, the fact that that's important. How does that look like?
Yeah, so I think within payments, what we've seen is that if you're handling other people's funds, as a merchant comes to you and says, hey, would like you to process my transactions, a lot of that framework that we have, regulatory frameworks, tend to be around payments institutions, licenses, or e-money licenses, EMI licenses that are in there, or banking licenses if you really want to get to those levels. What we're seeing now is that a lot of the regulations that are coming has to do with digital asset licenses, right? It's a license that says, as a company, I'm handling the digital assets of others, or I'm storing the digital assets of others, or I'm taking a fiat currency and exchanging that into a digital asset, and then keeping that as safekeeping, basically. So we're seeing more and more of those regulations. We have it in Europe, we have it in US, we have certain countries who are saying, well, we've created this framework. A lot of it becomes very overlapping in the same type of way, but slightly different rules. But overall, it's are you securing other people's digital assets? Are you on-ramping? Are you off-ramping? And within that, we have different graduations of doing that. So what I'm seeing now at the moment is companies who have either an EMI license or a PI license or whatever license, and then combining that with a digital asset license, is then say, hey, this is what we can do. You can come to us and you can give us your fiat currencies, and we can put it on a bank account for you, and we can regulate that because we have an e-money license. But then the moment you want to exchange that to a stable coin, we actually are an issuer. We are actually able to issue those stable coins, because we have a license that covers us to be able to go to the circles of the world, the teachers of the world, and take your fiat currency, and we can transfer it to them, and we get this stablecoin issued, and then we have it in a wallet for you, and we manage that, or we make sure that that's safe and secure, and we're audited, and all of those other things. So those are the combinations that I'm seeing right now, is like the EMI licenses of the world that are combining with the digital licenses, allowing companies to then figure out new businesses or business models around that, from your traditional exchange all the way down to, like what I was mentioning, if I want to issue a stable coin backed neobank at the moment, I can do that, right? I can have that.
So the regulatory framework in most countries is sufficiently adopting the development towards stablecoins?
Yeah, it tends to be a little bit behind always
Sure.
because, especially with new technologies, we're seeing it moving faster than the regulatory framework. So a lot of them are introducing new IDs. I think that's why a lot of these regulatory things tend to be very broad in scope.
Yep.
You're managing digital assets, right? We're not going to define what that is, but it could include stable coins, cryptocurrencies, whatever that is. And then you see a little bit of vagueness in that because they can't predict the future, right? Things can happen. Microtransactions come in and agentic payments comes in, and should an agent be able to manage your agentic, like all of those other things. So what we're seeing is much more of what's the overall scope? Are you keeping it for safekeeping? Are you facilitating trading? Are you moving money from A to B? What are those things? So you see that the overall license that we have with payments institution licenses, EMI licenses, banking licenses, is also the levels into which I take ownership and manage all of those funds. And then with the digital assets license, we see, okay, what are you facilitating? What's the service that you have, and how broadly can we have that? But then still put it in a box so that when we want to audit, you can at least look at those things. And I think those are the things that we're currently seeing. But a lot of the governments, they don't have they don't know what's happening. So they need to interact with the industry, and they need to see that happen. And as new business models come in, a lot of those companies have to sort of like apply for a license, and then, well, I think this one would fit your situation. And most of the time, what we're seeing is that as long as things don't go bad, right, as long as things don't collapse or anything like that, it's fine. It's when companies get in trouble that we see a tightening of regulations, or a much more specific, or making sure that audits are there, or making sure that the compliance aspect of that needs to be tightened up a little bit.
Yeah. Looking at Europe, how do you compare stablecoins with the digital currency that we are trying to develop?
Yeah, for me, what I'm just noticing is that whenever governments, or whenever things are happening in Brussels and there are great IDs, I think the challenge that I always see is that within tech, within cryptocurrencies, we've had people on the forefront really developing things and just pushing things out. Again, might be in the gray areas, still trying to figure out, but innovative, but also actual doers and people who are seeing the vision, executing on that, building technology, putting it into the market, getting validation out of the market, and then continue to grow that business. A lot more in the US than we see in Europe, but we're seeing those things. Whenever you have governments and politicians and people who are writing about it but are not actually executing and building it, we have great, fantastic ideas, but the execution is oftentimes missing. So I always look at government-backed, or especially within Europe, that makes it even more challenging because it's not just one country. It's, a bunch of countries coming together and having to agree on something, and then saying, hey, how do we deal with that? Who will be in charge and who will be managing that? I think that always takes a lot longer of the time. So I haven't even been tracking what's been happening within that space, because unless you actually produce something that people can actually use and can get behind, it's going to take a lot longer of time. But at the same time, I'm not saying like only companies should own that space. No, as a government, if you want this to be a big part of what you're doing, you should invest in those people. You should find those people. You could say, hey, this is for the greater good that we're doing that, and we need to do it. But again, with fiat, we've seen it, like things that we've seen throughout the years. We're not seeing innovation. Not that you have to have innovation in money, but even the migration from physical currency to digital, a lot of the innovation that happened within that was the banks who were taking that ownership, right? Like, we're from the Netherlands and stuff, and we've seen a company like a Current or an Ideal come in, which was a collaboration of the banks who were trying to fight against the schemes to say, we need something that we can control and that we can own. And it was actually their own little network, but they set it up as a different company and they owned it. And now you have a Wero who then comes in and then acquires that and takes some of that technology. But it needs innovation. It needs to be continuously developed, because once you think, oh, we've captured a market share, this is working, and we don't have to reinvest in it, we don't have to innovate on it, or the business model is actually, let's lower the price as much as possible for us as institution to benefit from it.
Yeah.
you're not reinvesting into the product. So what ends up happening is that either those products die, or you get to a point where new innovation comes in and solves the actual problems of today.
Yeah.
And I think with European backed stable coins, yes, but who's doing the execution? Who's actually working on it? Who's investing in it? And who's making sure that it becomes a success?
So you have some hesitations.
Well, not if it's there, I would definitely say, hey, it's there, and if it works and it is a good alternative, I think people will definitely use it. But I have hesitation because I haven't seen the execution.
Nope.
Right? Innovation and success leads to those who are really pushing the envelope and are really doing things, right? We can look at open banking and say, is that innovation? Yes, there's definitely innovation, but for it to adapt to that level, right? Everybody also needs to use it. And if it's not better than the current product, why should people use it?
Yeah.
So if you're doing a European backed coin, but it's not better than the alternative that people have, or a better solution, or not even necessarily a cheaper solution, but if it's not better, then I'm always going to be hesitant, because I'm like, the proof is in the pudding, right? It's, are people using it? Does it serve a benefit? And up until now, I haven't seen any of the benefit or the execution of it.
So looking at the future, how does the stablecoin environment look like in 5 years?
Yeah. Well, I think the benefit that we have right now with just technology, commerce, and just people overall, right? It's that I don't believe that one thing will rule us all. I think we have different preferences. We have different use cases. We have different things. I think stable coins, I think one cryptocurrency has proven that it's an innovation compared to what we have. Legacy infrastructures are being replaced. Some of that might be the modernization of the existing infrastructure that we have, moving into the cloud and leveraging AI and all those other things. I think cryptocurrencies, and especially the blockchain ledger and stablecoins within that, are within the finance industry that same equivalent, right? We need to update our systems for a different way of moving money around. So for me, I think stablecoin will be one of those key components that we will still have fiat. We will still have systems that want to move in that way for use cases that it's relevant for, and that will continue to be there. But I think we'll see more and more use cases where incorporating stable coins will be beneficial. We talked about consumers and users wanting to have a wallet where they can have a stable coin because they're trying to prevent themselves from fluctuating currencies, right? That could be a benefit. That could be enabled through NFC technology, and being able to pay and tap from that, and just having your, still being part of the economy and being able to spend within that, but not having to worry about the fluctuations that are happening in the currencies. I think from a payments or a merchant perspective, we'll continue to see companies that not just gaming and betting, but also marketplaces where money needs to move a lot quicker, or where we need to have escrow type of accounts or smart contracts being applied, where we're saying, hey, somebody's renting your Airbnb for the next month and they need to have a deposit in there. We're putting that into a smart contract, and only when they've qualified for all of these different things will that funds be released back to the customer. So we'll see use cases where stable coins and all of those things are there, just arise more. Will that take over everything that we're doing? I don't think so. I think it will probably get, I don't want to put the number on it, but it will have a decent use case, and we'll have it in those scenarios, in those use cases. I think we'll have more and more stablecoin issuers around the world. I think within trading, it will speed up a lot of things. FX, it will allow people to hedge, or have much more optimized balances and all those other things. So I think it will definitely have its use case.
The future is bright.
Yeah, future is bright. I think, as I'm a payments optimist, right? Like, I want to see all the technologies succeed. And I think if we can replace legacy infrastructure with new modern solutions, and we within payments are part of that innovation, I think that's the best thing for the industry.
Yeah. I found it very interesting, Dwayne. Many thanks for being with us today and for sharing all your expertise and knowledge.
Absolutely. Thank you. I appreciate it.
If you're watching us or listening to us, feel free to react or look us up at LinkedIn or at ifmail.com. Thanks, and see you next time.